Hi, I'm Martin Pring. They say that a picture is worth 1,000 words, but I say that a chart is worth 1,000 pictures. And that's because charts in the financial markets often scream out very important messages that an important or significant trend reversal has taken place or is about to take place. Each month I publish a newsletter called the Intermarket Review, and each issue contains what I call the chart of the month. And that features a market that I think has just turned or is about to turn. So this series of videos aims at presenting these charts of the month. So if you're interested in them, please hit the subscribe button and you'll be brought up to speed on a regular basis. So without more ado, let's go to the chart room and see what's in store this month.
With fears ranging about higher gas prices and tensions rising in the Middle East over the possible bombing of the Iranian nuclear facilities, it would seem a slam dunk that commodity prices are headed higher. So let's see what the charts are saying. My previous video focused on gas prices, but now that we have the end of the month close data for March, we can take a look at one of my favorite indicators. That's the ratio between my index of inflation to deflation sensitive stocks. It's shown in this chart. When it's rising, the implications are inflationary, as it means inflation-sensitive stocks, such as resource-based, are beating their deflation-sensitive counterparts, and its implication is deflationary when it's falling. Typically, deflation-sensitive, such as financials and utilities and staples, tend to do best at the beginning of the cycle, and inflation-sensitives, such as resource and basic industry, outperform towards the middle and the end of the business cycle. This month, the ratio broke down from a multi-month head and shoulders top, thereby confirming weakness in the long-term momentum in the bottom panel. What are the chances of this being an accurate signal? Well, look at these previous instances of top completions. They were all followed by nasty declines in the ratio. Note that in all these instances, momentum in the bottom panel was falling, as is currently the case. Since this relationship is a relative one, it doesn't tell us which direction the overall stock market will take. The data is mixed, but offering a slight upward bias for the stock market overall. However, it does indicate that deflation-sensitive stocks will outperform their inflation counterparts for the foreseeable future. Also that bonds will outperform commodities. This chart compares the ratio to a measure of industrial commodity prices in the center panel and bond yields in the bottom window. Here are the breakdown signals from the previous chart, and you can see that commodities fell in each instance. Also, bond yields dropped. They're pretty low right now, but it would appear that at the very least they could expect some ranging action based on this relationship. In conclusion, it would seem that commodities are going to be outperformed by bonds over the next few months, and deflation-sensitive stocks will outperform their inflation-sensitive counterparts. If you enjoyed this chart of the month, you may want to go to Pring.com and download a free sample of our Intermarket Review, a monthly roundup of the world's principal financial markets with a special emphasis on the US. We also look at global indicators, bonds, precious metals, currencies, and international markets using ETFs to execute our strategies as much as possible. You'll find unique indicators and intermarket relationships you cannot find anywhere else. In the meantime, thanks for watching and good luck and good charting.